Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale.
Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
Good evening and welcome to the Australian Stock Market Show. We hope you've had a great week so far. It's a short week as it is. Now sit back, relax and get ready to dive into all things stock market with us. Tonight we'll cover some exciting stocks including AMP, well maybe not, Newcrest Mining, Megaport, Ampol and more. So get ready as we give you insights, tips and strategies to help you profit more from the stock market. Our main topic for tonight is top ASX stocks in the second half of 2021. Is Treasury Wine Estates on the list? Hello, I'm your host, Janine Cox, and joining me tonight is Dale Gillham, and we're Australia's most trusted stock market educators. Hello, how are you going?
Oh, look, should I say super, fantastic, great, or just brilliant?
You are good today, aren't you?
We had an awesome weekend. It was just, I can't believe the weather we had.
I know. Melbourne's amazing sometimes, isn't it?
I know, the only thing frustrating me is the market at the moment. not the actual weather.
Performing the way you expected.
No, I thought we'd go up last week, but it was an inside week. And so it's interesting to see what the market's going to do. But we'll answer that question tonight, won't we?
We will. And look, I had a bit of an interesting evening last night on my way home.
Last night? Oh, okay.
Yeah. Something actually jumped out to attack me.
Oh. What was it?
It was a massive deer. Like I have never seen.
I thought you were going to say a man in a trench coat.
I think the only time I've seen one as big as this, and that's, I'm talking about a deer.
Oh, a deer. Okay.
Is when I was in Canada, and this deer was huge. It was the elk, you know how they grow really big, and it was mating season. And I mean, I won't describe their anatomy, but they are huge. But this deer was massive, and I thought for a minute that it was going to run out in front of me, and I honked the horn and put the brakes on, and lucky that go-kart, the go-kart racing, you know, the driving that I do, that's come in handy, because I needed it last night, I can tell you, because the road was wet.
So what did you say when you saw it? Oh dear.
No, that's hilarious.
Okay.
You're a comedian. What am I going to do?
Oh, I don't know. Let's get into something a bit more sensible. But for those of you who are first-time viewers, welcome to the show. We really enjoy welcoming you to our show and hope you have a really interesting show, and we do share with you some great insights. Now, for those who are beginners in the stock market, congratulations for taking the first step. As tonight, we'll share some simple things that you can do right now to ensure you profit more. Now, remember, we're here to help you, and so if you're uncertain with the market or have a burning question, please email Janine and I, as we'll answer your questions in our next show.
Now remember to send all your questions to info@wealthwithin.com.au and type Wealth Within Live in the subject line. As always, this is a two-way street, and that means right now you need to click on that subscribe button. Come on, I know you want to.
I can hear them clicking.
Moving on, it is the first Tuesday in the month, yay! And this means we look at the Australian stock market. So let's get into the charts, shall we? Okay,
so on your screen right now are the charts of the All Ordinaries Index, with the monthly chart on the left and the weekly chart on the right, isn't it?
That's the usual process, for very good reason, to make sure we have a look at the bird's eye view and see what's going on big picture with the All Ordinaries. And I left this 6.5%. It was actually about 6%, I think.
So that's on the right-hand side. You've got to show people what you're talking about, Janine.
Well, you're my right-hand man, aren't you?
Well, you've got the mouse pad.
So 6.5% up to the current prices at the close today, I think it is, from the all-time high pre the GFC meltdown. Okay, so we're only just getting back above that level, and we've actually traded above the COVID high last month. So that's exciting to see that happen. So in theory, there should be plenty of upside to come over the coming years.
Look, I think there should be plenty. I just think it's not going to run as fast as what we've seen here. I mean, because obviously looking at that, and people that would look back at some of our videos that we did a couple of months ago, would know about, I was talking about momentum and speed of the market. Now, this long move it's been the fastest move back up, or down and up, that we've ever seen, and we've talked about that a few times, but I think we're going to see it more flatten out, more like we're seeing through here. It's probably going to flatten out a little bit, but do it from a higher level. That makes sense. Did you understand? Yep. So it'll actually won't go as fast as what it has been before, but it's still going to be great. It's still going to be bullish. And let's just go and have a look at the weekly chart from a little bit more of a shorter term view on it. What are you seeing right now? Because everybody hears my views all the time. It still
looks bullish. Until it tells us otherwise, we have to assume it's going to remain that way.
Yeah, and that's the thing is, so this week I was saying it's quite important at the moment. We've only got 2 days of data, Monday and Tuesday, and here the low is 7280. Last week we had a low of 7270, so it's still 10 points higher than last week. So I'm thinking if we do get an up week this week, let me just drag that down. If we get an up week this week, I think we're on the way again.
Yeah, look, I mean, Westpac gapped up on news. So I think when big banks start gapping up, it could mean we're getting closer to that point where we've got to have a bit of a peak occur on the market and on the bigger stocks, and then a bit of a slowdown for a couple of weeks. Yeah,
I'm thinking we've probably got maybe 2, 3, 4 weeks up max till maybe towards the end of May, and then that'll be our peak.
Well, the budget's obviously coming out this month, so we get to find out what's happening there, and that could be something that slows the market down.
I know people that stay up for watching budget night and do that, and I go, you're a sick puppy. I just read it in the newspaper in the morning. I know.
You're talking about me.
I am talking about you.
That is all from us about the Australian stock market. Our first email tonight is from Joe. Thanks so much, Joe. Hi, Dale and Janine. Thanks for the wisdom you share with us on your show. I have shares in AMP, UG, and that I bought for $10.58 in 2007 after receiving a small inheritance. The share value today is only $1.09 and the chart looks bearish to me. I'm unsure whether to cut my very big losses now or be hopeful of an improvement and hold medium term to long term. Have about 2K worth of shares in AMP currently. Thanks, Joe. Look, thanks for being so brave and actually putting that one forward. So, yeah, what are your thoughts, Dale?
I think it's the wrong question, though, because it's not about whether you've held on to AMP for so long, it's not funny, to these levels that it is not necessarily the question. It's the question is, she's got $2,000 in that share at the moment. The question is she going to do better in that share in the next 6 to 12 months or 2 years or 3 years, or is she going to do better in another stock? That's more the question in my mind.
Right.
It's not about whether you continue to hold AMP or whether you exit it. Or is it saying, okay, do I stay there or do I go somewhere else?
Yeah, now the other side of the coin is that when we've done reviews of clients' portfolios in the past, if there is a small holding of a particular stock, sometimes we said, well, why bother holding it, get rid of it, or just keep, if the client's asked us about the stock, it may be not worth the client actually bothering to sell it and just to keep holding it and leave it there. So it's really up to the individual to decide how they're going to manage that. But I mean, you've said both depending on the client's circumstances, but not in terms of personal financial advice, but just giving an opinion.
Yeah, it is. And I mean, we'll look at the stock anyway. We'll look at that in a second, but it's more about where you're going to get the best bang for the buck on, I think, because you've held it for so long, and Joe, and it's really whatever happened yesterday is not necessarily relevant. I think it's the decisions you made got you to where you are today, but you're getting more and more knowledge as we go along, and as people are watching the show. So let's make the best decision right now for that stock and holding for the portfolio.
Yeah, I mean, looking at AMP, it could actually find support where it is right now, and that's the thing. We've said this a number of times though, as it's continued to fall, and I guess that's the risk with it. I mean, could it just go off the market?
And well, the thing is it's not looking good. Its fundamentals aren't looking good. I mean, if we look over here, currently this week we're looking at a low of $1.03. This low over here in May is, what's that one there? If I put it on there, there's $1.08. So it's gone below that. So it's gone lower than it was in March 2020. So it is technically, we need to keep saying it's in a downtrend, don't we? So from that point of view, but it could find support soon, but we don't know.
Yeah, look, I mean, how long has it gone down so many weeks without a reversal? It's not often. So I'd be looking to see if it, at least if it does a reversal over the coming weeks and starts to move up a bit. And if it does that, then I'd be just tracking that up and watching.
So would you say this is medium to long-term bullish sometime soon?
No.
Okay. That's our answer. Okay, the next question we've got is an email. We got an email from Ben who says, "Hi guys, love the show. It's awesome. Thank you very much. Just wanted to get your thoughts about day trading. I've been following people on YouTube and Twitter who only seem to trade for the first 30 minutes of the day after open and never have any open positions at the end of the day. They talk about scalping, buying the match and reading tape. Now, these people I follow are making a good living. What do you think the success rate is for this kind of trading, or are they just gambling? Thanks, Ben." Interesting question, isn't it?
What do you think about that?
The skeptic in me says anything on YouTube, when people are doing stuff like that on YouTube, it's probably not fantastic.
Talking about day trading, then?
Yeah, day trading. And that's intraday trading, that's not day trading. Day trading is when you hold positions over a number of days, not weeks or months. That's intraday trading, and the
intraday trading is when you just get in the morning.
You're trying to scalp a little bit of money
during the day.
It's a lot of work. There's a lot of work involved in that.
There have been guys that have come and told you that they've done that in the past, and you've helped them to think outside the box and get out of that mindset, haven't you?
Yeah, they make far more money. And what we teach people is, so often we've had people come to us and they say, "Oh, I do 30 trades a week, or 60 trades a month, or 150 trades a month, whatever else." And what we do is we talk to them about what they're doing and why they're doing it. And in the end, what we teach them is they can make more money with less effort and have less trades. So, and just because they seem to be trading for 30 minutes a day doesn't mean that's the amount of time they're putting into it. They would be putting in the rest of the day to work out what they're doing the next day. So they'd probably be working 6 to 8 hours in a day to work it out. They wouldn't be just doing 30 minutes in a day. I can pretty much guarantee that. I've never seen a day trader do that.
We've had people come to us and they're trying to track and do what the institutions are doing. So a lot of that stuff comes from the fact that the big end of town don't want to hold money overnight, because they've got a lot of money on the line, and there's a cost to that. So that they're trading intraday and just looking for small moves in share prices, but they're dealing with big amounts of money in the first place. So, but for an individual, it's a very different situation. And when you actually see that, and we've proven this to people before who have done this, when they start learning, though, they realise that they can make more money by actually holding it longer.
Yeah, and they can. And there's a couple of other questions in there. One is, do you want to sit on your computer all day long every day doing stuff? That's one question. And the second is what are you trying to achieve?
Well, the theory is that you should be able to put a trade on in the morning, go and do what you want to do, and then close it at the end of the day. That's what the theory is, but it never works out like that for most people. It's when the market's open and you're placing trades, you become part of that market. So you become part of the emotions of the market, and that's one issue. So you're talking about people who are not trained, first of all, trying to deal with how to buy and sell and use some sort of techniques to do it.
Correct.
Risk management and all of that, and then try to deal with the psychology of the emotions of it, which, nobody's trained to do when you first start out in the market.
Bingo. So whilst the people on YouTube may be good traders, they may be good traders. I'm not suggesting they are or they aren't, but they may be good traders. People watching that generally aren't necessarily highly educated. So they're seeing somebody doing all this trading in the first 30 minutes of the day, but the chances of somebody watching it being good and being successful at it long term is probably less than 1%?
Well, we saw lots of people get burned, didn't we, trying to do this? But,
and people think because trading more and trading closer to the market means you make more money, whereas we've proven time and time again it's the opposite. But I think it's a really good question, Ben, and I think really you're not the person that you're watching. You're not Janine, you're not us, you're not myself, sorry, you're not anybody else. You have your own life, you have your own beliefs, you have your own money, you have your own goals, and you need to trade like Ben can trade and what's congruent with you, not what somebody else is doing. So you need to become your own trader.
It brings the other thing, because people think you have to trade like that to make an income.
You don't.
You don't.
Not even close to it. Some of the best traders we know trade maybe 8 to 20 times a year. And that's pretty much all you need to do.
Well, look, some of the traders that are trading shorter term and they're actually experienced traders who have been trading stocks and now using leverage, they're trading shorter than that, like more times than that. But they are short-term trades, so there might be weeks, that they're trading over.
And I think I think one of the things, especially with guys, is we feel we need to have a job. So doing something every day and trading every day thinks we're actually got a job, whereas trading's about making money. If you could make all your money in one trade a year or 500 trades in a year, which would you pick? One. And that's pretty much what you would pick. So, but again, good question, Ben. Please keep asking questions. We're really, really happy to help you out and talk to you more about that. But the next question we have is from James, who says, "Hey Dale and Janine, absolutely love your show and have learnt so much. I've read both of your books and really enjoying the ride. I have a question though, if I may. I bought Newcrest Mining, or NCM, at $28.75 on the 22nd of April following the downtrend reversal. Unfortunately, it seems that the stock is on the way down again towards my 15% stop loss. I'd be interested in your thoughts. Thank you. Kind regards, James." Good question.
Yeah, now look, he's right. It was in a confirmed downtrend, crossed the trend line, and then it's pulled back. So, you know, but there's more to it than just trend lines, isn't there? He didn't talk about that, but he's bought it on for some reason because it started going up. And it does look like it could continue to rise, but at the moment it's taking a bit of a breather. So you just have to be patient with it at this stage.
But that happens, doesn't it? It's, stocks go up in stairs. They go up a bit, then they rest a bit, then they go up a bit, then they rest a bit, then they go up a bit, and they rest a bit. But sometimes that resting is going down for a little bit, then they go up again. They just don't go straight up generally. So
You'd
look
like
after your
them
stop loss. We'd love them to, but just it's not in your stop loss. That's the reason why we have a stop loss. And a stop loss is just a line in the sand saying if it goes below that, I'll get out of it. It doesn't mean the stock's not going to turn around and go up again, but it doesn't mean it's not going to go further again. It's just protecting your capital. But you're doing the right thing at the moment. I think he's done well.
Yeah, he has done. And it's also about knowing the share, because this particular stock is a highly volatile share. Okay, it's a gold stock. But look at the history of it. You can just see how it moves. And I don't have to show you a whole lot of history, but over the history of this share, I would have to say, given it's a top 20 share, it's one of the most volatile stocks in the top 20.
Yeah, and I think it's easy for us to say, don't worry. It's harder for people to do when we're saying, though, don't worry about it, stick to your stop loss. And if you do get stopped out, then that's just trading, and just go back in and do it again, because the next time you could make a lot of money, but we're not suggesting that. I think you've done very, very well at the moment.
Now, we've got a question from Diane and Daryl. Thank you very much for that. And they're saying, "Hi, Janine and Dale. Firstly, thanks for all the great information and entertainment you provide on the show. We knew very little about the stock market 5 months ago, but have learnt a great deal from you both, although still haven't bought any shares yet. My question tonight is about research. As Dale often says, do your research. I'd like to set up a go-to list for getting the correct information. Projected EPS was an example to enable us to be more informed. Any advice would be greatly appreciated. Kind regards, Diane and Daryl."
Awesome couple.
See, question is doing the research, but what's their why, what's in mind, what's their approach? Because the research could be completely different from one person to the next, depending on what their plans are.
Yeah, Diane and Daryl, we're sort of nearing the end of their working lives in the last 5 or 10 years of their working life, because I know Diane has been doing our trading mentor course, so I know what she's been doing. So it's about looking at setting themselves up for retirement. So putting your research in could be around it. Like, absolutely, is that what are you wanting to do? And then looking at your research and having a checkbox. And I know you're really good at this when you're mentoring people. It's like, okay, here's your checklist. Do this, do this, do this.
Well, it was a checklist for their analysis, but also a checklist for the analysis on the chart. So we've got a trading plan. So when you have a trading plan, that's almost like a checklist in itself, because it has a list of things that you need to have reviewed before you actually purchase the share. And it sort of takes you through. It's like a flight plan, isn't it? And there's also a checklist for your analysis on your chart to make sure that you've included all of the analysis that you want to include. So you could, and the trading plan one has a checklist for the fundamentals as well as the technical analysis.
So fundamental analysis, where your EPS, dividend yields, PE ratios, where would you get them from?
Okay, just easily enough from a broking website. If you've got a broker, you'd use that. You could use Morningstar's another example. They've got a free service. Some people pay for the premium service to get more information, but the free one is really good.
Sometimes that's really worth it. So it's about setting what EPS yield you're looking for, or EPS you're looking for in terms of whether you're doing a growth or a blue chip type portfolio.
Yeah, you're talking about filtering out certain shares because there's a big pool of stocks, right? So how do you choose the stocks? And you want to have a checklist so that it helps you actually choose the right shares for your portfolio, is what you're saying.
And then, going into what do I want a dividend? Am I after dividends? What kind of level of dividends do I want? Put that on it. So as you're filtering through that, you'll come up with the stocks that you want to be putting into your watch list, and then obviously using whether it's some basic technical analysis or just using your fundamental analysis to buy, depending on the goal of the portfolio.
I'm sure Diane's going to love you for that.
Yeah. Well, hopefully
Not sure about Daryl.
No. Well, Daryl can buy me a beer.
It's time we get into tonight's topic, shall we? Top ASX stocks in the second half of 2021. Is Treasury Wine Estates on the list? We have had a number of viewers ask, how do you identify the top ASX stocks to buy for the second half of 2021? And we plan to answer this question and share our shortlist, as well as reveal whether Treasury Wine Estates is on the list.
Wow.
Now, before we talk about these stocks, the events that followed in COVID-19 meltdown last year created an odd situation across global markets. And looking back, we know the Australian stock market fell faster than has occurred in history. And since this event, the rhythm has changed, right? So as we near the midpoint of 2021, what has unfolded this year is vastly different again, which is proving difficult for investors to identify the stocks they should hold. So perhaps this is because so many stocks have had runs, and currently the consensus is that the market is due for a pullback. But should we pay attention to short-term news or focus on the longer-term direction? Good question, isn't it?
Now, the important thing to do is not allow all the doom and gloom in the news to be the sole basis of your opinion on whether to invest. Now, the reality is that we are in an economic boom, and it may not feel this way right now, because I can understand that, but history records it that way. Never does, and also that the same thoughts occur in every single market cycle, so we're pretty used to it. When governments spend big to stimulate economies, what follows is a boom, and we know that for a fact. Generally, the bigger the spend, potentially the bigger or better the growth opportunities for investors paying attention to the right information.
So when looking for the stocks that are likely to grow in the second half of 2021, we need to pay attention to quality stocks and those companies that are likely to benefit in the current environment. A good place to start the search is to pick from stocks with history of making returns from the financial sector, for example, healthcare, and we believe there are many opportunities there. Energy and resources. Now be selective, as these can be highly volatile, and look at innovative companies that take advantage of technology post-COVID. So I think it's important to have a number of stocks from different sectors. And when we talked about doing this, the hard part for me was, it's like that kid in the candy shop we talked about last week. There's so many good stocks.
Yes.
How do you pick those? And the top 100 has heaps of shares. I mean, if I went to the top 200, I might have spent a lot longer, searching for the stocks to talk about. And there are stocks in the top 200 that I would go to. But so I had to limit it to the 100 for tonight. And I'm sure we'll come back and review this at some point. But there's some really interesting shares.
It is. I mean, there are a lot of interesting shares, but I think the important point that you talked about is looking for proven performance, because all too often we see investors trying to chase the new big thing all the time. And by doing that, they're getting into unproven stocks or unproven performers. Now, in times when the market's not being normal, if you go to those stocks that proven time and time again that they perform in the marketplace, so whilst they may not be looking super exciting right now, with high probability that they will, because they do it time and time and time again over decades. And that's really what Janine's talking about, is go for stuff that most of the time will work really, really well. Right? And so let's, for example, say like a CSL or a Cochlear and those sorts of things. If you look at their yearly returns going back 30 years, I can guarantee you they're up 70 to 80% of the time.
Yep.
Those are the sorts of stocks you should go for.
With proven history.
With proven history, not with a stock that might be 50-50.
Yeah, the latest thing that's come out on a broker website, that's the top traded stocks, as in with the highest volume traded. They're the ones we looked at, I think it was about a month ago.
Yeah.
And they were stocks that might necessarily fizzle out in the second half.
Yeah. So what have we got now? On the screen?
I just wanted to mention, investors can look at the top 200 shares or the top 100 shares, whatever they want to look at. But obviously, bear in mind that it becomes more challenging to filter out stocks when you've got a bigger pool.
Yep.
And how do you do that? So I'd always go for quality over, over speculation. So that's big stocks first. And that sort of tends to mean that people, we're encouraging you to focus on the top 100, really. But if you find something that's good outside the top 200 that has that track record and looks like it trends well on the chart, then, why wouldn't you consider that? But in this case, look, the big question was, do we consider Treasury Wine Estates as part of the list? And I thought I'd address that first.
Oh, that's the elephant in the room. Okay.
Yeah, but we'll look at, on the screen there, you can see that I've got the list of the 200.
Okay.
So there's a lot, obviously there's, heaps of stocks there. We're
200
not going to
stocks.
go through all of those, but you can see some really good stocks at the top of the list already. So there's going to be a bank in there. Now, I'm not going to show you the list, all of them just yet, but there is going to be a big bank, and I would always go for one of the big four anyway on the top list, but I haven't picked those because we've talked about those for so many weeks now.
Is this ordered by market capitalisation?
This one is ordered by market cap, I believe.
So CBA is now currently the biggest stock in our market.
Yep, so you can see there, I've got it set up there.
Okay, just asking.
CBA is just amazing, isn't it? It's incredible stock, and CSL's following behind, and BHP. So, if you have those sorts of stocks in your portfolio over time, you're going to do well.
Okay,
likelihood.
Yep, they're just telling me I need to enlarge it so everybody can see a little bit better. So let me do that a bit and I'll bring it all up to a bit bigger.
Now, Treasury Wine Estates, it's funny that we actually talked about that, or put that post out today in our newsletter about Treasury Wine Estates. It was in the headline of tonight's show, the topic. But we didn't actually know that they came out with an announcement today.
Yes.
And they were talking about how they've made a deal with a company in the US who's the second biggest distributor of wine, I guess, and alcohol in the US. So I don't know that the market's had a chance to digest what that means yet. It may not all be completely clear, but I think it's a really good move, obviously, for Treasury Wine Estates. And so you and I have talked before about when things get tough in the market, and companies will either sink or swim.
Correct. Yeah.
It's the good to great scenario. And so is TWE going to be a great, or is it going to really struggle? Well, its share price has been down since what happened with the whole trade arrangement with China, and the talk about the tariffs, them not taking the wine, and then there was talk about China, what was happening with the price of the wine and deals. So there was a lot of controversy around that, and the share price really got hammered. So we're going to show the chart of TWE to you shortly. Yeah. But what we're basically saying is you can pick from any of those stocks.
Pick from any of these stocks.
Yeah. So TWE, we can see there, it has been down for some time. We like this particularly. It looks like it's starting to turn around today, and it may be up for the rest of the week. But, it's just because a stock started to move up on news doesn't mean it's going to continue to go up.
Correct.
And that's what people have to really think about here, because, you don't just follow news reports and jump in thinking that you're going to make money out of a news report.
Yeah, well, that move today could be just people jumping in on a news report thinking it's going to take off. But the big end, you can't tell me the big end of town probably didn't know this was happening anyway.
Well, you'd think so.
They would have already known there was deals going on, or there was talk going on, and they would have been doing that. And when the announcements come out, it's not necessarily, whilst it's supposed to be everybody hears it at the same time, how do you stop Chinese whispers and things like that going on?
Yeah, true.
It's pretty hard.
Do we know what the detail of the deal is? Not really from the announcement that came out.
No, well, I don't know yet. Yeah, so hopefully tomorrow that'll be absorbed and we'll see what's happening. And this week will probably tell us what the likelihood is of the direction of TWE will be.
Yep, that's right. So that is one that we think will be on the list for the second half at this stage, but it's more or less, it's a day-to-day or week-by-week process.
Yep.
Where you're reviewing what's happening to the stock, as we do on the show with other shares that we talk about. We're looking at the share. One week we might look at a stock and we think, well, okay, if it rises from here, we think it's good, but if it falls away, there's a risk of a further fall. It's always that conversation, isn't it?
Can I say something? There was a couple of things. Something you said a little bit earlier ago. Is good to great, finding companies that are good to great. That's the Buffett principle as well. Yep. Buffett tries to find undervalued companies that are very good, that have potential to be great, and buy them when they're undervalued. But also he says buy in doom and sell in boom. Now Treasury Wines, recently with the Chinese tariffs and everything else, that was pretty doomy. So there's a couple of things lining up there for this stock to say it could do very well over the next 12 months.
That's true.
So next.
So that was you're pushing me along, I understand.
I'm pushing along. We're going to need to look at lots of stocks.
Okay, BOQ. All right, Bank of Queensland. I actually do really like the way that this chart has unfolded over the long term.
Yep.
It looks good to me. More medium to long term. It's up really strongly like the rest of the banks. We've seen ANZ, we've seen Westpac and Commonwealth Bank all moving really strongly like this.
Yeah.
And at some point they will have a bit of a breather. So what I'm saying is I wouldn't be too concerned if you're not in it now. There are still going to be opportunities to get into this
Maybe
share.
after a pullback, after we find this next peak in May or something like that.
Yeah. could be good.
Yep.
So, look, and remembering too that portfolios are shuffled at the big end of town in July. So there's that thought as well.
So what are you expecting? Because obviously moving at the end of 30 June, we do see people doing things or institutions doing things pre-30 June. We see some shuffling of portfolios.
Yeah, we sometimes see a sell-off. So look, I think the budget will have a bearing on it as well. So we really need to just wait and see what comes out of that, and just watch your shares and see how they actually respond to what's being said. I'm not saying ever follow what the budget or what the media are talking about and then make a decision based on that. It's about looking at what the chart's telling you all the time.
Okay, so we like Bank of Queensland.
Yep.
Okay.
Okay, and I like Lend-Lease as well.
Yes.
So I think Lend-Lease is a really good company. I just think at the moment it's still in the bit of doom and gloom stage, and that this is where some companies could fall away.
Yep.
But you know, sometimes when there's a potential recovery underway, you just got to keep an eye out for when those opportunities occur. And it's not about trying to buy it while it's falling away, as we talk about often. So there's potential there, I think, with this share. Anything that's into the construction side of things, and okay, their business will have been hurt by COVID, definitely, and you can see it reflected in the share price. But look at some of the property companies that we've seen that have gone ahead.
Yes.
People are speculating on that at the moment. All the while, there's talk about how office space is going to change, the future of that's changing, and we've seen quite a few property stocks that just recovered really quickly.
On that point, or something interesting that Jim Beach said to me yesterday on my interview with him for our Flix show, our Talking Wealth on Flix, flixx.net if you haven't seen that by the way. And I was talking about property and property stocks and offices and that, and he said, but there's talk that people will need more office space because people will be demanding more social distancing. So instead of us sitting this close together on different desks, we'd be wanting bigger spaces and things like that. So companies may be even taking up more office space than less.
Well, yes, because they had a lot of companies doing the open plan thing.
Yeah.
Now, I think that's, a thing of the past now. These are companies who were going that
hot
way or
desking
have gone
and
that way.
everything.
Again, I need to think about the risks associated with that, and it might pay to put those walls back up.
Might pay to it, but Lend-Lease is one of those good to great type of company. It is a great company, isn't it?
But very volatile, as you can see from the chart. And
Make
so
a
that's
lot of
where
money.
it's not necessarily going to suit every portfolio.
It's not a CSL or a Cochlear that tends to trend really well, but it is a very
growth stock at times.
More of a trading stock. Okay, so
and look, A2 Milk is always going to be on that list. Just because of the company that it is and the opportunity. Excited. We've talked about this though before on the show, so I'm not going to go into this too much, but I will say if we just have a quick look at the weekly chart there, you can see that it started to stick its head up a little bit. We can see a bar is moved up this week, so that's a really good sign to start with, but still way too early because it's done that plenty of times before as it's been falling away.
How many people have bought into that and then said to us, not our students, but people have emailed, I bought it in and it's falling away, what do I do?
Yeah, that's right.
It's just...
Yeah, so look, I mean, if we go to the next one, this is in the property area. So this could be another one of those good to great companies that are doing amazing
Charter
things.
Hall.
Yep. Charter Hall Group, and look, it's come back really well. It's holding up at the moment. This stock needs to stay above 13.50 to stay in my good books.
I better put my glasses on so I can see.
If it trades below 13.50 strongly, then I'd be a bit concerned about its direction. So there's always a condition upon talking about a share and saying that we like it for the second half, but it's still got to meet certain criteria and hold above certain levels to do that.
So we've had 1, 2, 3, 4, and 4 weeks up, and then yesterday and today. Obviously, yesterday it was up, today it's down.
Yep.
That's why you've got the open.
Well, I'm
and
expecting it to come back a little bit.
Okay.
But if it comes back strongly, but below that 13.50, heading towards $13, then I'd be a bit concerned about it. So.
Okay, so if it comes below sort of this sort of area.
I'm not saying it would be a sell if someone was holding it. I'm just saying that it would be, we'd have to see it then move back above 14.50 for it to be an opportunity in the second half.
So what you'd like to see, if I use my little trend arrow tool, is here. So
you're getting technical.
I'm getting technical. So you'd probably like to, it's moving up, so you'd like to see it come down a little bit.
Yeah, I like it when you're my assistant. Can you?
I know, I'm pretty good at it.
Do that more often? Thanks.
I'm not going to wear a dress, okay?
No. Okay. You're being sexist now.
I am, actually.
How often do you see me in a dress?
I don't. I've got rid of my arrow, but you get the point. So you're thinking over the next few weeks we might have a bit of a retracement as long as it stays up above that sort of 13.50 area and then starts to move back up again, which I did try and draw.
Yep.
then it's fine.
It's good.
Then it'll be good. Okay, so that's our take on Charter Hall Group.
Yep, I noticed that you're not stopping me yet, and I've got my baker's half dozen.
Well, I
got a few extras.
didn't set the criteria on you. I just said the best stocks. And so if you think there are other stocks we should be talking about, then let everybody know about them.
Yeah, I told Dale that I couldn't find any stocks to buy.
Oh, yeah.
And he said, can you at least find 3? And I think I've got 1, 2, 3, 4, 5, 6, 7, 8. Yeah. And I could have had a lot more.
I keep telling you, you're a personal trainer. They can't count either, and they always lie.
Oh, okay, really?
Yeah, I'm going to call you the personal trainer.
Personal trainer of
PT
stocks.
for short.
Push them.
Yep.
All right, go stocks. All right, STO. Now we can see there that it's been in a bit of a pullback recently and it's consolidating. Now, I expected that it would fall away further, given it started to come back in that rhythm.
You're talking about?
Yeah, and it hasn't. It's actually held up really well, which is a good sign. So, you know, if this stock continues to hold where it is and start heading back up again, that could be quite interesting for the second half of the year.
Interesting. Some spike volume there back in March, on the 12th of March. So that was huge.
I think in the energy side, you can't look at energy and think, okay, economies around the world, they're pulling back on the resources side of things because they're going to more, you know, wind energy. They're looking at more, wave energy and solar energy.
Solar energy, thermal energy. There's a few others. They're looking at different.
But when you look at the stock, you've got to actually think about, well, okay, what's the share price doing, and just focus on that and then trade it. So look, I think Santos is a good one to have on the list.
Yep. So you're thinking if it starts to move up, or you're thinking it might have some more downside?
Oh, look, it has to move up from there to.
Yep.
You know, because there's always a risk that some announcement could come out, and when a share's in a holding pattern like that, the market's waiting for something. So you really need to allow that space to unfold.
So don't jump now. That's what you're saying.
Oh, I would never jump when the stock's pulling back. Yeah, like that.
Okay. No problems.
So CSL, we know, is a great stock
to
have. Fantastic share to have in a portfolio, and looks quite good at the moment. So yeah, I like this one for the second half as well.
Doesn't get better than this, does it, this stock? I mean, if you look at this is just a beautiful, beautiful stock to trade, isn't it? And to hang on to for a good portfolio return.
Yeah, and like, you know, we often think, oh, look, the share price can, you know, surely it can't go up higher than that. But hey, you know, we were saying that years ago when stocks were trading at around $100, remember?
Now, I know when I did the research on the top 20 stocks and looked at returns over the last 20 odd years, CSL, Cochlear and Macquarie Bank.
3 big ones that
they just
outperformed.
And they just, and if you look at, I know a while back I showed a spreadsheet of positive and negative years of each of the, I think it was the top 20 stocks, wasn't it? Of, you know, how many times BHP is positive and how many times it's negative in a calendar year.
We should do another one of those.
I should do another one of those because it's about probability. Whether you're an investor or a trader, it's about probability of getting it right. And so I would rather buy into a stock or trade a stock that's I've got 7 or 8 and 9 times out of 10 I'm going to get it right.
Yeah, and there were so many times where the year was down for a stock and then it turned around and went back up, wasn't it? You had a higher probability of making a win after that. Yeah,
I know NAB was like 50-50. It was like some years it was up, some years it was down, but it was basically 50-50. But when you're looking at Cochlear, CSL, they were really, really good. Macquarie Bank was really, really good, I believe, from memory. Westpac was pretty good. Westpac. And ANZ was sort of around the 70% there as well, really high. And that's really what you're sort of, the gist of what you're talking about.
Now everyone's going to be saying, can you show us that next week? I think we should.
They don't want much, do they? Or are you giving them suggestions to send them in so that then I feel guilty if we don't cover it?
Yeah, now look, Wesfarmers, we've actually got here. We can see there's the monthly chart with Wesfarmers. Now, this is a stock that just did nothing for many years. Look at it. So it's now playing catch up, I think, and it offloaded Coles, as we know. So that's out of the matrix for Wesfarmers, and they've just got a lot of capital there sitting and waiting to invest in some really good companies, which they have started. So I think that Wesfarmers long term is a really good option, and I think in the second half it could be good. I'm not saying that it's not going to pull back; it may do. So you've just got to watch that for the downside, because you know we can sit here and say that they're going to go up in the second half, but we don't know that. We don't have a crystal ball. It's just what it looks like today.
I think that's an important point to talk to people about. Is whilst we like these stocks, it doesn't mean they're going up, or they will go up. And I think that's a lot of people do rely on people, experts, or they watch YouTube videos and this person says, look at this stock, and then they jump into it, and if it doesn't do what it's...
But you have to manage it.
But you have to manage it, and I think that's why we're so constantly say to people, know why you're buying and when you're buying and how you're going to manage it before you jump in, because it's no use once you're in the money. Once your money's on the market, you get more emotional. It's simple as that. And then if it doesn't do what you expect, you'll get emotional and you'll make incorrect decisions about what to do with that stock. And that's why so many people struggle with the marketplace in terms of it. So what we're saying is, at the moment, the way the market is at the moment in this funny phase that it's in, it's best to go for these good stocks that do trend well and they've been proven performers.
Can I talk
high
now?
risk. Yeah.
Because I've just been told we've got 30 seconds, and of course, I got through them all. Fantastic.
I thought we had
APT.
5 minutes left. Now you've only got 20 seconds.
APT is my last one. Not right now, as you can see, because it's pulling back. It's coming back to fill that gap on the weekly chart. There is a risk that it could take out this low, but if that continued to fall, I'd be happy about that, because then it would potentially set up really nicely for the second half of the year.
The more A2 milk falls away, the more excited I get. And same with some of those other stocks, like Appen, like WiseTech, those ones. The more excited I'm getting. So right now, too much. But I think is that it?
Oh, can we keep talking?
Well, I'm not sure.
I'm being told no.
If you want the producer yelling in you keep talking, but I'm not, because he might hit me. But that's enough for our main topic. I hope you got some stocks out there that you would like to put into your portfolio. So just stick them on your watch list, and when they trigger a buy, get into them. But it is about time to get back into our emails. And the next one we've got is from Rashmi, who says, "Hi, Dale and Janine, can you please have a look at Megaport with the stock ticker code MP1 for me? I'm looking at taking a position in this. I think it has reversed the downtrend in the last few weeks, but there seems to be resistance around the $15 mark. Do you think it's better to wait till it pushes through to make an entry?" Now, many thanks to you and the team for putting this show together, Rashmi. So thank you very much for recognising the team. There's quite a few of us to put this show together, isn't it?
Fantastic. Let's talk about stocks.
Yeah.
Now, I'm looking at this one here. There, you're right. But look, when I see a stock and they're talking about stocks, I can't help myself. So Megaport is a really interesting share.
Yeah, I don't matter when.
Oh, you're okay. Look at how the stock's gone up to that $15 mark. He's absolutely right that there is an important level around that $15 mark. So good spot there on that, Rashmi. I think it looks interesting. This share, it's been in a downtrend, so that's a good sign, the fact that it's got in that confirmed downtrend, and we potentially would have a trend line down there. But sometimes there can be other things that you see on the chart. You're not necessarily going to enter straight away on the trend line. You'll be looking for it to jump hurdles to confirm, because the stock could easily trade up after a trend line and then turn back down again, couldn't it?
Well, I think he's saying if it pushes through $15, is it a buy?
Well, I agree. Look, I think it's a good opportunity to look at that.
But that's not a buy rule.
No, it's not a buy rule, but it's already traded through a trend line. That's why I raised it.
Yeah, I know that, but he's not even talking about a trend line. He's just talking about if it gets through $15.
I know, I'm just giving him something extra
You're
to think about.
giving him something extra, which you're prone to do, but you have to be really, really careful, Rashmi, because I see so many traders go, if it gets through this resistance, I'll buy. Going through a resistance point is never a buy signal on its own. It's not. And the reason why it's not, and I was doing a seminar for a whole group of traders a couple of years ago, and this one guy done 14 different courses and everything else, and he started talking about buying a stock that we're looking at when it broke through this level, and I said, why would you do that? And he goes, well, because it's broken through the support. And I said, well, I'm a fund manager. And he goes, yeah. And I said, do you think I know that? And he goes, yeah. And I said, do you think, I'm only a small one, and if the big ones have got billions of dollars? And he goes, yeah. And I said, do you think they know that you know that? And he went, yeah. And I said, do you think they can just push it through that price and let you buy it and then sell it into that buying that you're giving it? He goes, yeah. And then it drops back down below the level. And he goes, yeah. And I said, so that's why you don't do it. And he went, oh.
Good point.
Makes sense. So that's why you don't do it, Rashmi. You've got to have other rules. It's a confluence of rules around every buy signal that you have, not just trading through a resistance or selling short through a support level. You need to have other rules, like Janine mentioned, trend line. It could be other things as well that you might put together to go, yeah, that's a good buy. We like the stock.
Yeah, I think it looks interesting.
I think you need a couple more rules.
Yep. Okay. All right. Fantastic.
Is that okay? Can I shut up?
That's awesome.
Okay.
Now we have an email from Warnsey. Hi, Warnsey. Good to see you back again. Hi, guys. Hope you're well, and I'm looking forward to tonight's show. Could you be so kind as to take a look at Ampol, ALD, for all of us? Thanks. I'm liking the look of it, and I'm looking at making a purchase soon. Thanks to all the Wealthian team. Regards, Warnsey. All right. So we're looking at Ampol, ALD for him. I think it looks really messy. Looking at the chart, we've looked at this recently, and while it might rise short term, just the big picture chart of it's really messy, isn't it? There's so many resistance levels on the stock, and
isn't it?
Just the way that it's unfolded as it's come down here, it's taken out this low, which is a weak point. So the risk is in trading it that it could come up to say $29, $30, and then it comes back. If it gets above 30, then it's probably on its way.
Yeah.
But the risk with it is the volatility and the downside, given it's taken out that low.
Well, you've got to be a little bit cautious, don't you, given that's, we're talking about its all-time highs way back here. Now, obviously, it wasn't called Ampol back there.
Yes.
So
it was Caltex.
It was Caltex back there. So, and Caltex, we loved Caltex so many times. But
COVID changed the way that the whole way it was unfolding, didn't it?
It changed everything. So that's March 2015. We're now in 2021, just past March 2021, and it's lower. So is it going to go up, and why isn't it going up at the moment? Because it's still got the issues that Caltex had with its oil refinery and all the other bits and pieces that are around that, but it doesn't look super strong to me, does it?
Well, look, I mean, unless it starts, like I said, moving up closer to that $30 mark, then, it's going to struggle. And then it's got to get through all of these levels up here with these highs here to challenge.
So you're like me, you're thinking there's much better stocks out there.
Well, that's right. So at some point, you've just got to say, okay, so what if it goes up? Just pick something that's a little bit easier to analyse on the monthly.
But that's the point, isn't it? It's like a lot of people, I'm not saying Warnsy's doing this, find a lot of people make their job hard by trying to pick stocks that are the harder ones to pick. So whereas it's like, oh yeah, CSL's pretty boring, it just goes up. Geez, that's tough. Making money's tough.
Give me something interesting.
Give me something interesting. Give me something that's more challenging, and I'll get into that. Making money out of CSL is easy, or Macquarie Bank, or whatever else, or Wes Farmers, Woolworths, whatever it is. So give me something challenging, but it's not about that. It's about making the money. So because making money, if you get it right, making money is really boring. It's just you just keep doing the do.
That's why some of the traders that we teach, they trade medium to long term, and then they need to have a short term strategy and portfolio as well, so that it keeps them interested.
Yeah, and it's something a bit of a challenging, but if they blow up their short term portfolio, they don't blow up their whole life.
Because it's a smaller amount.
Because it's a smaller amount, so it's ways of doing that. But hey, Wansy, again, another fantastic question. We love having your questions, so keep shooting them over to us. Always happy to help. The next one we do have is from Adrian, who says, hi, Dale and Janine, my question is about dividend reinvestment plans. Oh, fantastic. We haven't had one like that before. Particularly with a small amount invested. Now, do companies vary in how they apply the dividend reinvestment? Obviously, they cannot issue a fraction of a share. So what would happen if you had, for example, $5,000 invested in CSL at a current price of $2.70? You would be able to purchase 18 shares. Now, their last dividend was $1.34. So you would have to hold 200 shares worth $54,000 before you could get one share in a reinvestment plan. Would companies realise this and not let you participate? If you didn't realise this and elected for the reinvestment plan, would you simply miss out on the dividend? Thanks and go Cats. Oh, the Cats supporter. I like it. Can I answer that?
Okay, he's been watching for a while.
Please, can I answer that?
Yes.
The company will always pay a dividend to all its shareholders. They can't not pay a dividend to your shareholders. So if they announce one, you get it. Now, I used to have this issue with News Corp years ago when I used to trade News Corp a lot. News Corp paid almost no dividend. Like, you might have 5,000 News Corp shares and you'd get about a dividend for $20. It was not much. And so, but I had this issue where I'd trade News Corp for 2 or 3 months and then sell it, and it'd pay dividend in the middle of it or near the end of it, and then I'd have nothing. And then I'd get this dividend statement saying you've got $3. And I go, okay, well, News Corp's more expensive than that. And then I'd buy News Corp again, and then that $3 be part of my News Corp shares, and that would happen so many times. Or I'd occasionally get a statement and it'd say, you've got one new News Corp shares because all your dividends that we've been holding for you now add up to one new share. So that's how it happens. So they'll keep the money for you.
You were silly, weren't you? Because you should, and I know you've learnt from that over the years.
I'm silly, thank you.
Yeah, not to have a dividend reinvestment plan.
No, I wasn't doing a dividend reinvestment plan. I'm just saying
until it added up.
Until the dividends added up to one share. So in your example, until the dividend added up to one CSL share, you wouldn't get a new share. But if you sold all of your shares, they would have to pay you out your dividend. They would send you a cheque for it. because you're now no longer a shareholder. So they just keep it. So, and not all companies do dividend reinvestment schemes. Janine and I don't.
CSL are not doing one anyway, I don't think.
So you don't, but the way they do them generally doesn't change. It's just, if you've got enough in there, like you might not have enough for whole numbers of dividend shares as well. It's not like where the share is $10 and we're paying you $10 in dividends, so you get one share. You'll always have fractions that they keep.
We've had some clients that when they've transferred stock in to invest it for us to look after it, and they've had these massive spreadsheets that they've had to get their accountants to review to work out the cost base of all the little parcels of dividend reinvestment. Yeah.
We don't do dividend reinvesting at all because we don't find it's a value to us. The amount of effort and everything else you've got to do it, you might as well just take the dividend yield, put it in your bank account, and then put that money into the next purchase that you do. So that's really what we do. I think that's about it for that one.
Yep, and next is an email from Stuart. Hi Dale and Janine, could you please share your thoughts on LKE? I entered at 38 cents in Feb and have set a stop loss at 20%, which is now approaching. Would you say this is now bearish or in a consolidation pattern? Cheers, Stuart. Okay, interesting looking stock, very volatile, Lake Resources, and consolidating at the moment.
I'm not
just
talking
going
because I
sideways.
did all the last one. That's your turn.
Well, it's down from where he bought it, right?
Yeah.
So that's the challenge, isn't it? And of course, we're going to say make sure you set a stop loss. That's obviously the most important thing, particularly on a really volatile stock like this. But the question is, should you set a bigger stop loss on a stock like this?
No.
No, Dale says no. I say it's whatever the back testing tells you, but with a stock like this, the problem is how reliable is it going to be?
Very unreliable.
That's the challenge with it, isn't it? So, okay, if the stock falls away from here, then the risk is it could continue to fall. True?
And you can lose your shirt. Yeah.
Well, potentially. If it trades back above, it would really need to trade back above this high here of 34.5 cents for me to think that it's starting to move up again. And this is where the challenge for investors in buying in at potentially the wrong time, because it had already had such a huge run.
Yeah, I think they bought
So
in
it's
the wrong
about
time.
why you're buying it. Then the risk is that you get stopped out because it's got to come back a certain way. Every stock, like you said before, goes up, comes back to have a breather, goes up again, has a breather, but they don't all go up again.
No.
The challenge is being able to stay in it long enough, and so that's where being able to purchase at the right time, and this is why doing the analysis and understanding how to buy, at best times rather than just any time is so important, because it can be the difference between the winning trade and the losing trade. So I'd say just have a bit of caution in terms of how you're managing this one for now.
Yeah, I mean, I'm just looking at on the chart, looking at the volume, and you can see, look at the masses of volume that are coming in while it's moving up to this sort of high, and then obviously it's just dropping right off through here down to these really low levels, and so it's going back to levels that are not supporting an upward move at the moment.
Okay.
They look like. And it's not falling away, so that's the good part. If this was more vertical and falling away, I'd be more bearish on it. But right now, I'm not super bearish on it. I'm just saying if it falls away a little bit further, you'll probably see a pretty fast move going down.
Well, it doesn't have to move far for it to be a big percentage fall, does it really?
And that's the issue that we have with stocks like this, and now they've set a 20% stop loss on it, which I think is too big. The more volatile the stock is like this, the more illiquid, I think you're probably...
But you don't know whether a 20% stop loss is right or not unless you've actually tested it.
Yeah, correct. Correct.
So, look, we should move on now. We've got another question.
Oh, okay. I was enjoying that.
Well, our next viewer question tonight is from Nick. Hello, Dale and Janine, long-time viewer that has just come back to watch your show. Welcome back.
Yay.
Have also got a number of my workmates following now as well. It's roped everybody in at work. That's funny, isn't it? So you can all talk about it. My question is about ALU. I have it on my watch list and would appreciate your thoughts on where you think this stock may go in the short, mid-term. Keep up the great work, Nick. Thanks, Nick. Good to have your emails. We hope to see more from you in future. Okay. So looking at this one, and it's an interesting stock choice actually. Altium, quite a volatile share, but the personality of this stock has really changed over the past few years, hasn't it? Because it was a really nice trending stock.
It was.
And you just look at the volatility on the right-hand side of the chart, and you can see it's almost like it's coming off on the downside. You know, it's turned a corner and it potentially could keep falling away. If it trades below this low here, which I'll just enlarge the chart so people don't have to get the magnifying glass out to see what I'm talking about. This low here, around $26, if it goes below that, the risk increases significantly of the stock taking out this low over here in March 2020. So you just have to really watch that. If it trades above this week's high, which is 29.74, it actually could be nice for a few weeks at least. And start moving back up again. But, you know, if it starts trending up again, there's a lot of resistance across here that would have to get through at around $33 and again at around 36. It could get back into that zone, though, if it does start moving back up.
Yeah, it could. I mean, absolutely, because it is a volatile share. Now, is it a buy and hold share?
No. It's a trading stock.
It's a trading stock. So
it used to be like a more of a medium to longer term share opportunity, but now, given the personalities change, you've just got to go with it and then treat it as you see it.
But that's sort of what we're talking about with the marketplace a little bit earlier. We're talking about the All Ordinaries Index, how the market is different now than what it was 18 months ago.
Really good question.
So it is a really, really good question, because this is the kind of stock that you could have bought 2, 3, 4, 5 years ago and just ran the run with it, and that's much more of a, not a buy and hold, but an active investor and taken the nice run with it. But the last few years, because of this volatility that it's got, it's really turning more into a trading stock rather than the buy and holdy type stock.
Yeah, so this is where COVID would have taken a lot of people out of this share. I mean, particularly on a trend line, if they had had one on there, they potentially may have been able to get one up there, been out and protected by that until it then potentially recovers. But we don't have a downtrend line to be able to get back in unless you look at the weekly and see whether it's got something on the weekly there.
I just think it's interesting because often you'll see a stock do something like this. You'll see a move from a high to a low, back up to retest the high and then turn around to go lower in this sort of zigzaggy pattern. That's what you generally see, and a lot of traders don't see that. And what we find is traders will get into here, or investors will get into this part of it thinking, yeah, I'm going to make some money, it's going up now, it's done really, really well in the 12, 18 months, 2 years beforehand, I'm going to make a lot of money. Then it starts to turn away and they'll go, oh, it's not too bad, it's okay, and it goes down the next month and go, oh, still not too bad, I'm not losing too much money. If it goes back up to where I bought it for, I'll sell out, and then it goes down and down and down and down. But they get excited in these little ones.
Well, they see that it's the lowest
here.
price in 12 months, and it must be a good time to buy now, but they're buying right on that high-risk time. And I can remember a presentation that we did years ago, and you brought up this chart, and it was a stock that had actually been really strong over time. And you posed it to traders in the room, and you said you were looking at the daily chart and you said, would you trade this stock, would you buy it? And a lot of them put their hand up and said yes. So then we showed them the monthly chart and their faces changed because it was actually in a long decline.
And that's the thing is about talking to traders is most of them look at daily charts. It's like that question we had earlier about day trading. And people, if you're looking at things through the microscope, you actually never see the world for what it is.
Well, it's like being a horse down a racetrack and you're not seeing what's coming either side. You're just looking straight ahead, but you can't do that in the stock market.
No, and whilst we love this stock, and it is a really, really good stock, and I do appreciate you bringing the stock up, right now I think it's a little bit too early for it. I think it is possible it's going to turn over and go down from where it is. And Janine did give us some points on that chart where she thought it would fall away from that point of view. So probably a little bit early, but I'd still keep it on the watch list. Yeah,
if you're not in it, if you were in it, then you would just stay with it and you have a stop loss, obviously. But if you were not in it, you would just watch and then have a good set of rules to look at getting in.
Cool. Is there anything else you want to say on this stock at all, or you've had enough for it?
No. Are we going to talk about another stock?
Do you want to talk about another stock?
Actually, Dale, I think that I've just been told that we're at the end of the questions.
Oh, okay. So we don't have any more stocks.
No. Every week we get great questions and we thank you very much for your contributions. And some of the questions that are coming through are really intelligent questions, nice, interesting stocks to talk about. Dale and I always love that. So they just get better and better. And, it's always a challenge, isn't it, for investors when they're putting stocks up, because sometimes they'll not want to put up their stock because it could be falling and they may not want to share the fact that they're holding a stock that's been going down for so long. But I take my hat off to Joe, who actually brought up AMP. I thought that was a really good one.
I also think it's good that people are giving us much more thought out questions a lot of the times, like the dividend question, some of those others. 12 months, 2 years ago, we were just getting questions about stocks.
Yeah.
And that's all we were getting is questions about stock. And it's also, a lot of people are watching this and traders are watching this, and we're really high level in trading it because we do want to get these out to the masses to get people to understand the market. Doesn't mean that we're not very technical in our nature behind the scenes in what we do, but I think it's really, really good.
Yep.
But but we are taking out, the mystery out of the market and showing people how to profit from it anyway. But if you've been finding yourself challenged by the market, then the best thing that you can do is just call our team and have a really good chat with some traders or real traders who have been where you are right now, and they help you understand, or they will help you understand how you can gain more confidence, clarity and profits for yourself. If you do want to have a chat, just call our office 1300 858 272 or email the team at info@wealthwithin.com.au.
Now we've answered your questions. It's your turn to hit that subscribe button and say thank you to the team who put a big effort into bringing you this show each and every week. And also remember to put this show on your calendar to join us right here on the Australian Stock Market Show every Tuesday at 7 to 8 p.m. If you'd like to have your question answered on the next show, or if you have a topic that you'd like us to cover, send an email to info@wealthwithin.com.au and type Wealth Within Live in the subject line. Remember, you must email before 3 p.m. on the day of the show. I think I'm going to email because I'd like to have that topic that we talked about tonight.
Oh, you're going to. So
will I get preference?
So what's the name you're going to use? Yeah, I don't know. And you can tell me so I can just delete the email. No, I won't delete it. As always, thank you for joining us, and we hope you have a great week. We do look forward to you joining us again next week. But for now, goodbye, good luck and good trading.
And drive safely.
Yeah, don't find any deers.